Good morning and welcome to Stock Market Today. It's Monday, September 16th, 2019. I am your host, Dan Russo, Chief Market Strategist at Chaikin Analytics. Find me on Twitter at DanRusso_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com/today, where you can sign up for a free email to follow along with this show, as well as get daily stock ideas for you to consider. Hit your inbox every trading day before the market opens. So U.S. equities were mixed in Friday's trading. However, on the week, Dow was strong, marked an 8th straight gain, and the S&P 500 posted a 3rd consecutive weekly advance. The Russell 2000 had its best week since late 2016. Treasuries extended the recent backup in yields. The dollar was down versus the euro and flat on the yen cross. Gold was down 50 basis points, and WTI crude was down 40 basis points. Your outperforming groups on Friday: materials, financials, and energy. Your underperformers: REITs, consumer staples, and tech. The key theme on the week last week was that reversal of a lot of the major trends that had been in place as investors favored the areas of the market which had been lagging and taking profits in some of the leading groups. But as we get to the desk this morning, futures are down 50 basis points as investors react to the attack on the Saudi oil field over the weekend. Asian markets were mixed overnight. Hong Kong underperformed. China was slightly weaker. Japan was closed for a holiday. European markets are lower to start the week. Treasuries are rallying after that big backup in yields last week. So we're seeing a little bit of a flight to safety following that attack on the Saudi oil field over the weekend. The dollar is weaker versus the yen, but stronger on the euro. Gold is up 80 basis points, and WTI crude is up 8.5%, though I will note it is off its overnight highs. As we take a look at the S&P 500 here, a little bit of stalling activity. Now, remember, we've been highlighting resistance in the area between 3,000 and the July highs, and we're there, right? And we could stall further following that attack in Saudi Arabia over the weekend. As we said, futures are down about 50 basis points here to start the day. Now, if we do pull back, we have to look to the support zone in the 2,900 to 2,950 area. And in particular, if we do pull back and test that zone, we want to see the RSI hold bullish ranges. To us, that would be a sign that it's just a near-term pullback and the trend is likely to reassert to the upside. RSI continues to move higher with price, so that is bullish. But as we said, if we're going to pull back, we want to see it hold bullish ranges. For now, Chaikin money flow is bullish as well. So the indicators line up with the recent price action that we've been seeing. We are now within that resistance zone, and we could see some stalling activity. Actually, if you look the last couple of days, if you're into candlesticks, you could see signs of stalling activity here as we enter this resistance area between 3,000 and the July highs at about 3,030. So just something to keep in mind here. Watch support, and in particular, if support is tested, really watch how the RSI reacts. If the RSI holds above 40 while support is tested and holds, that would be a bullish sign to get aggressive in the market leading areas, and in particular, the leading stocks in those areas should those stocks become oversold. Continue to stick to the process. Let's talk about our market in a minute. What are we writing about in the note today? So stocks rallied for a 3rd consecutive week, in particular the S&P 500. Small caps outperformed, and they are now nearing key resistance. So we highlight this in our note today. Oil spikes overnight following those weekend attacks in Saudi Arabia. It's interesting. The spike takes us kind of the top of the recent trading range. We'll take a look at that a little bit later in the show. Space and defense holds up despite the winners being sold, right? A big theme last week in the market was selling some of the leading areas of the market. Now, space and defense has been a leading area, but that group held up well. We'll take a look at that chart a little bit later. And futures, as we said, do point to a lower open here today. Now, let's look at the major indices from a power bar perspective. They're all skewed to the bullish side. Dow added 10 basis points on Friday, 5 bullish stocks for 4 bearish stocks. S&P 500 was down 10 basis points on Friday, but still skewed in favor of the bulls. 126 bullish or very bullish stocks for 79 bearish or very bearish stocks in the S&P 500. NASDAQ was an underperformer. 23 bulls to 18 bears there. Small caps outperformed on the day, as they did throughout all of last week. 670 bulls, 289 bears. So solidly bullish from a power bar perspective for the small caps. We'll see if they can now break through 160 for the IWM. Big downtick in bonds, spiking yields. We'll look at that. Materials were a leader. They were up. They were the leading performer from a sector standpoint on Friday. 6 bulls to 4 bears. According to the Chaikin Power Bar, small cap stocks and large cap stocks were bullish. Major indexes all remain bullish. So let's look at our stock of the day now. A10 Networks, ticker symbol ATEN. And right away we'll say it's a stock that's under $10. Was up 65 basis points on Friday. A10 has a very bullish Chaikin power gauge rating due to very positive expert activity, attractive financial metrics, strong earnings performance, but the stock does have weak price volume activity. But when we roll up 20 factors, 5 in each of these 4 categories, we come out with that very bullish rating. Strong trend, strong industry group, type of name we want to consider. But as we look at the indicators, bit of a mixed bag here, right? Nice spike here, but still kind of within the confines of a trading range. Now beginning to outperform the market. So market and model are in agreement, but the stock is overbought based on our overbought, oversold indicator. And I don't like the fact that as we trade up here near these one-year highs, Chaikin money flow is bearish. Stock is above a rising long-term trend line, so it is a bit of a mixed bag. I think we want to add A10 to a bullish watch list and see if the tactical situation, i.e. overbought, oversold, and Chaikin money flow begins to improve. Should that be the case, all else being equal, this starts to look interesting. But for now, not that interesting to me today, especially with the market trading lower. I want to see this stock when it's oversold, and I want to see that money flow improve to really give me confidence that it makes sense to own a name like A10. Going to add it to a bullish watch list here today and see if the situation gets better. Let's look at the sector tracker now. Movement of the major sectors over the last 5 days to the last week of trading. Back up in yields. Continue to help the financials, up 3.8% over the past week. Energy was strong throughout last week as investors rotated into the beaten down areas of the market. Obviously, we would expect that to continue today with that big spike in oil prices overnight. Materials, another group that's starting to move counter trend. We'll see. Really what we want to see now is are these the starts of new trends, or are they simply counter trend moves within the context of their prevailing bigger picture trends? Comms, discretionary, healthcare, and Utes are middle of the road. Tech, staples, and real estate underperforming. Utes and real estate obviously negatively impacted by the spike in yields. Staples seeing money rotate out of some of the defensive areas of the market and into some of the more cyclical areas. So that weighed on that group last week. Now our industry in focus today is one that could get traction if rates really do begin to move higher. It's bank services. So over the past 6 months, it's actually been a slight outperformer, outperforming the S&P 500 by 55 basis points. Power bar ratio, which measures future potential, is very strong, right? 53 bullish or very bullish stocks for only 3 bearish or very bearish stocks. And it's moved up 8 slots over the past week, currently ranked number 2 of the 21 subsectors that we track. Let's take a look at some of the interesting names there. Simmons First, SFNC, First Horizon, FHN, and East West Bancorp, EWBC, all have very bullish Chaikin power gauge rating. So this is a kind of an area now where we want to start to skew some of our focus, because if rates really are beginning to move higher, we would expect the banks to participate to the upside. So we're not quite there yet. The group is still an underperformer. You'll see what I mean in just a moment. But we want to start thinking about it. Maybe start building some watch lists. So here's KBE, the SPDR S&P Bank ETF. We can see here it has a bullish Chaikin power gauge ETF rating, just turned bullish this week with this bullish price action. Now, clearly still in a range, right? Sideways would be the trend, or a range-bound fund. Now, what's interesting to me, though, is the decline in underperformance. Notice how this group was a massive underperformer since May, and now we're starting to see some of that underperformance diminish. Should that continue, that would then line up with the bullish power gauge rating for the fund, and all of a sudden it becomes a compelling area of the market to look for ideas. Again, I think we're going to take our cues here from interest rates, but obviously something we want to pay attention to. In the near term, fund is overbought based on our overbought, oversold indicator, and Chaikin money flow continues to oscillate between bullish and bearish, but just something to keep an eye on going forward. Now, let's look at Friday's S&P 500 movers and shakers. XEC up 8%. Didn't see any real news there. PXD made some comments in the space in general. There's been some commentary about a focus on buybacks and dividends. FCX up nearly 4%. No real news there. That is a bullish stock. DD, some older news, it's saying that it's selling a business, nothing company specific on Friday to send that stock higher by over 3%. And AVY caught an upgrade, adds 3% to the name. PGR gave a report on some recent premiums. Market didn't like what it heard there, down 5.6%. CenturyLink, CTL, positive trade idea coming out of JP Morgan, written up in Barron's over the weekend, but I didn't see any real news on Friday. MKTX down 4%, nothing specific there. Company's been volatile of late. An investor took a stake in FLR, but wasn't enough. Stock down 4%. And Juul has been in the news lately in a negative light, and that impacted some of the tobacco stocks. Mo down 3.7% on the day on Friday. Now let's take a look at what we're talking about here. Let's look at some of the trends. It's Monday. We look at the big picture macro trends in the marketplace. Here's crude, right? And crude's really been in a trading range, right? Solid trading range between $50 on the downside and $60 on the upside. Now we are testing this $60 mark here with crude up over 8% in the pre-market. Now I will note when trading opened last night, crude was actually up close to 20% initially. So obviously we're giving some of those overnight gains back. But crude oil now testing the top end of this range following those attacks on the Saudi oil field over the weekend. Now it's hard to say how this is likely to play out going forward. It really does become a function of what quantities of oil are in reserves that could fulfill the market in the near term, how fast the oil field can be brought back online, and really getting an assessment of the damage. So it's really hard to say whether or not this is going to be a change in the trend or remain within the consolidation. Obviously, it's something we're going to watch. Now, what's interesting to me is XLE, despite the consolidation in crude, XLE has remained in a downtrend. Now, look to break this downtrend line here today. I would expect XLE to spike in the early going today. We'll see how it closes. And again, we'll watch how these energy stocks trade. Now, energy's been a lagging group. Energy's been a bearish group within Chaikin Analytics. Could this be an exogenous event that sparks a change there? We don't know, but the fundamentals are still bearish. I think you need to give this some time to play out. Now, we've been bearish. We'd had some open bearish ideas, which we closed because oil and energy names started to spike last week. So we got those ideas off of our list, but we're going to continue to watch the situation and see if this downtrend in energy is shifting. We saw the big spike in yields over the course of last week. Really what I think is driving this is we've seen some positive economic surprises, which maybe puts the path of interest rate cuts through the end of the year into question. Now, Federal Reserve widely expected to cut rates by 1/4 of a point at their meeting this week, but we'll see what the commentary is for the likely path of rate cuts throughout the end of the year. Just to give you some context here, we still are in a massive downtrend. We've taken the 50-day moving average, still below the 200-day moving average. And if we want to think about retracement levels, look at how far this can spike and still be within the confines of normal Fibonacci retracement levels of this decline. 2.11% would be a 38% retracement. A 50% retracement is at about the 2.3 mark, and a 62% retracement is about the 2.5% mark for 10-year yield. So just wanted to give it some context here. Obviously, we're going to watch. Treasuries are rallying this morning. Yields are heading lower following those attacks over the weekend. But, so that's what I mean when I said it remains to be seen if this is just a counter trend move or the start of something new. But obviously, we've highlighted that we've been in the camp of the path of least resistance being lower for yields, but have been saying we wouldn't be surprised to see a backup in the near term. Now, this is a harsh backup, but it's still within the confines of a downtrend. I mean, we haven't even made a higher high yet. Continue to watch yields. Profit taking in gold, another theme last week. Again, just for some context, it looks like a counter trend move within the context of an existing trend above the 200-day moving average. RSI holding bullish ranges. Here are the fib levels to keep in mind should gold continue to head lower. 1450 is 38%, 1414 is 50%, and 1380 is 62% retracement levels. I will note, though, that the GDX, the gold mining stocks, have broken down through this downtrend. So let's see what happens here. We're seeing a bit of a spike in gold here this morning. Finally, space and defense bucks the trend of selling the winners. Here's XAR. Traded up near highs. RSI still in bullish ranges. Still an outperformer relative to the SPY. So while the winners were sold last week, space and defense was not in that group of names where investors were taking profits. That's going to wrap it up. I will see you back here tomorrow. Have a great Monday, everyone.